Excellent. So I want to start by welcoming everyone to NowStreet's Evolving Capital Markets and Crowdfunding Symposium. And as always, as I do at these events, I'd like to start by expressing my sincere gratitude for your participation today and for joining us in this important mission to repair our capital markets so that we could restore that wealth-creating engine that has always enabled America to prosper. For those of you who don't know me, my name is Dara Albright. I'm the founder of NowStreet, which symbolizes the Wall Street of tomorrow and the hope for a more prosperous economic future. It's a thrill for me to be here in Atlanta today, not only because this is mostly because this is also an anniversary event for me. 1 year ago, I stood in this very room, in this beautiful conference room, and introducing the private company marketplace for the first time to a room full of about 30 people. And it's truly amazing to me to see how much has transpired over the course of the year. After many events, many cities, and many airplane rides later, it's just truly remarkable to see how far we've come. And I'd like to start off by expressing a really sincere appreciation for a man named Vince Molinari, who's the CEO of Gate Technologies, who unfortunately was supposed to be here today, is not going to be able to make it, had a last-minute emergency. But we really wouldn't be here had it not been for Vince, and I really wanted to acknowledge him. To give you a little bit of a history of how this all kind of started, about 15 months ago, I reached out to Vince, and I said, I want to organize events in cities across the country, and I want to introduce people to the private company marketplace. They need to understand how our markets are evolving, how it's affecting our economy, and how they could capitalize in this. And without flinching, Vince said, well, you've got our support, and stepped up to sponsor our first event when truly no one else would. And that's something I will always be appreciative of. Anyway, a few weeks later, Vince calls me up and says, you know, at the next event, I want to talk about some of the game-changing legislation that's being discussed in Washington, D.C. They're talking about removing the solicitation ban and legalizing crowdfund investing. And I remember thinking, yeah, that's great, you could talk about it, but like, that's ever going to happen. And then a few weeks after that, Vince calls me again and says, you know, there's a bundle of bills, including McHenry's Crowdfund Act, that have passed the House Financial Services Committee, and it passed with strong bipartisan support. And it's going to the House for vote next week, and you know, we have good indication that it's likely to pass. He said, you know, you should really write about that. So I wrote an article called Bipartisanship Prevails for Job Creation and sent it to Congressman McHenry's office. And when I did, I invited him to speak at an upcoming event that we were doing in January. That was an event in New York, which actually he graciously agreed, and that turned out to be really the first major industry event for crowdfunding. And it was the first time where a lot of the crowdfunding enthusiasts and thought leaders from all over the country met for the first time in person. You know, it was kind of historic in that respect because there's been so many groups that were formed out of that, such as Safira and the CFPA, some of the organizations, and we're going to talk about some of those later. So it's amazing that a few months later, here we all stand on the threshold of a new era for the capital markets. And today you're going to learn how the fusion of new legislation, advancements in mass communications, and a groundbreaking marketplace for private company stock is democratizing the capital markets and creating a number of new opportunities to create wealth. And it is my true honor to be able to introduce you to many of those leaders who are shaping the capital markets of tomorrow. I'd also like to give a special thanks to our sponsors for providing the resources to make these events possible, but also for having the foresight to realize the significance of the private markets in both capital formation and growth investing. We have come so far, but yet we have so far to go. And repairing the capital markets is no easy task. And so many people, since I've become so obsessed with this cause, have said to me, why are you doing this? What is this about? And I say, you know what? My motivation is really simple. It's my 7-year-old and my 5-year-old who's going on 15, but that's another story. And like my parents and my grandparents before them, I want my kids to grow up in a prospering America. And like your ancestors, I'm sure, my great-grandparents came to this country because this was a land of great opportunity. It was a land of equal opportunity. It took enormous courage for most of our ancestors to get here, and that's why the United States became known as the home of the brave. Well, I, for one, will not sit back and watch it become the home of the entitled and the disenchanted. So let's get something straight right off. Prosperity is not something you deserve. It is something that you create. Previous generations were able to create it because they had a functioning market system that allowed them to gain capital, gain access to that capital to launch a new business and invest in companies where appreciation and growth was in front of them, not behind them. And that's what we need to recreate. Because if we could democratize market structure, if we could steer capital back to America's smaller issuers and investors, we can create opportunity, we could create jobs, we could innovate, and we could restore American pride and optimism. And we're so fortunate that we have leaders on Capitol Hill, such as Congressman Patrick McHenry, who not only acknowledges the injustice in our capital markets, but is introducing the legislation needed to equalize it, to give smaller investors and issuers the same opportunities to prosper as the larger ones, because that is exactly what America is all about. And here's another news flash. Fixing flawed market structure is not something that we should do, it's something that we must do, because it's our only way out of this economic mess. The government has basically exhausted economic and fiscal policy to the point of ineffectiveness. They can't bring rates down any lower. If they do, we're going to be paying the banks to hold our money. How much longer do you think China is going to be paying our banks to hold their money? We can't keep injecting money into the system because eventually the dollar is going to turn into the peso. And I realize that most people think that rebuilding the financial markets is an impossible task and it's something that can't be done. And you know what I say? I say I love those people. I love those people because their cynicism gives us the impetus to persevere. And that's why I've decided to dedicate today's event to the naysayers, because we will prove you wrong. We're going to fix this, and we're going to start with the most economic, restorative legislation in recent history, which, of course, is the Jobs Act. The Jobs Act is already shaping our financial markets so smaller issuers can tap into new resources of capital and that smaller investors can once again access growth investments. Here are some of the key components of the Jobs Act. Today, of course, we're going to focus on crowdfunding. But what's really interesting to me is that when you see a lot of the media coverage that's talking about the Jobs Act, they're really focusing on all the benefits that the issuer is obtaining out of it. And they're not so much talking about the benefits to the investor. And that's what I kind of also wanted to focus on a little bit here today, because no matter what, everyone in this room, no matter what your job is, whether you're a business owner, an attorney, a CPA, investment banker, wealth manager, broker, we're also investors. I mean, that's what we're doing. We work hard, we're building our nest egg to ultimately one day retire. And as investors, if we don't have access to growth investments in our portfolio, this is what our retirement is going to look like. And let's face it, the majority of today's American workers, they're paying into a Social Security system that's not going to be there for them when they're ready to retire. This is the harsh reality. With Social Security gone and most of the investing public only allowed to invest in these traditional, conventional public assets, today's American worker won't be able to retire until he or she is about 145. And you know what? We're going to be living to 145 years old, especially in New York, where you're banned from buying 64-ounce sodas. So here's another interesting fact. There's $3.7 trillion that's sitting in IRA accounts. 98% of that is in traditional IRAs where the holder is limited to investing in this, okay? And as you can see, very limited growth. So that's like basically a little over $3.6 trillion that's barely beating inflation. So now the remaining $74 billion, that's it, is smart enough to be invested in self-directed IRAs. And that's where the account holder is able to invest in all types of alternative assets, such as private company stock, real estate, hedge funds, franchises, I mean, you name it, a lot of different opportunities. And you're going to meet later on this afternoon Jim Jones, who is a director of business development at AccuPlan, and he's going to talk about that and you know, show you how you could actually restructure your retirement portfolios to put growth back into it. And here's why this is really so important. Our nation is arguing, well, our nation is at war right now. There's a class warfare going on, and they're arguing over how tax structure is creating the great wealth disparity. Now, I look at it like this. You could tax the 1% 100%, and you could tax the 99% 0%, and you'll still have this great wealth divide. Why is that? Because the real crux of the problem is not the tax structure, it's market structure. This is what happens when you have laws that tell 99% of the population that you are too stupid to be investing in private growth companies. And you need to look no further than Facebook's capitalization to see how flawed market structure is widening the great wealth divide. So look what happened. 2004, Facebook valued at $5 million. The American investing public, we didn't have an opportunity to invest in it, but Reid Hoffman and Peter Thiel, two angels in Silicon Valley, saw something interesting in this young college kid wearing a hooded sweatshirt. And granted, they took a big, major risk putting their money into this company. But with that risk deserves an enormous reward and enormous appreciation, which is what happened. But you know, still, the public didn't have that opportunity. A year later, the market cap was $100 million. Public still didn't have that opportunity. Venture capitalists, Silicon Valley investing, but not the public. A year after that, market cap $550 million. Still, public doesn't have the opportunity to get in along with the venture capitalists. Then, 2007, something really interesting happens. Facebook reaches 50 million users, and Microsoft comes in and invests at a $15 billion valuation. $15 billion, public doesn't have access to any of it. Then we go through financial crisis, down market, and in 2009, there could have been an opportunity for people to invest in Facebook at a down round, basically at a $10 billion valuation. Public didn't have that opportunity, but you know who did? Russian-based investment firm Digital Sky did, and they had the opportunity to invest at $10 billion valuation in a down round. Then it's really interesting if you look in 2010, January 2010, secondary transactions start occurring on private company marketplace exchange platforms at a $14 billion valuation. So for the first time, this is now giving accredited retail investors an opportunity to own stock that they're buying from some of the employees and early shareholders of Facebook. Now, what's interesting about this is this would have been the stage normally historically, where a company would have gone and done an IPO and the public would have captured the rest of that appreciation. But that's not what happened. A couple of months later, 2 months later, in fact, Lou Kerner, who is the foremost social media analyst on Wall Street, came out with a report that basically put a $100 billion price target on Facebook. You could read that at Second Shares. And all of a sudden, people just started clamoring for shares. Stock in the private markets start to go crazy, climbs all the way up to a $50 billion valuation. And here's where it gets interesting. January 2011, the stock is at a $50 billion valuation where Goldman Sachs does a private placement. The reason why they had to value it, their private placement of $50 billion, is because that's where it was trading in the private markets. The private markets dictated that valuation. Now, Goldman Sachs coming out and doing this private placement led to a complete media frenzy, and fearing that the SEC would consider this general solicitation, you know, the Goldman Sachs basically decided that they needed to pull the deal out from under all of their domestic investors and only give it to their foreign investors. So here, once again, the public gets screwed in America. The Americans can't invest in the fastest growing American company, but we'll give it only to our foreign investors. Then finally, June 2011, GSVC, which you could look on that, it's a publicly traded company on NASDAQ that actually invests in pre-IPO companies. They bought shares of Facebook and finally gave at least public investors, you know, a taste and some access or exposure to shares. Then the S-1 was filed February 2011. And then, man, did it go crazy trading in the private markets. Why? Because this was hyped up to be not the IPO of the year, not the IPO of the decade, but the IPO of the century. And everybody thought that once this thing went public, this was going to be a major pop. So what happened? You know, everyone started buying it, increases almost immediately. The next couple of months climbs another $20 billion in valuation. The stock goes public, as you know, at $104 billion, and it was a complete and utter failure. Now, you could blame Morgan Stanley for, you know, its underwriters for whispering to its institutional clients that they're lowering their expectations while they're raising the price and size of the offering, or you could blame NASDAQ's technology glitch. But you know what the truth is? I think that the public just eventually stood up and said, you know what? We don't want to be Reid Hoffman's exit strategy anymore. We don't want to buy stock when it's all the way up there. We want to have the opportunity to buy it down here. We want to have the opportunity to buy it with the sophisticated investors. So now, you know who's making money trading Facebook? It's a guy named Algorithm. And this is what happens. This is what, I have to give Gene Massey credit for that joke. I don't know. This is what happens when you have a government that tells 99% of its population that it is too stupid to be investing in private growth companies. Those companies are too scary for you. There's so much fraud in that market. You need to be investing in the safer companies, the larger companies, you know, the companies like Enron. And truthfully, I will never understand the logic behind laws that say that only permit average citizens the opportunity to invest and purchase stocks when the sophisticated ones are ready to dump them. And you know, this wasn't always the case. Look at Microsoft. Here's where Microsoft went public. 99% of its appreciation was realized after it had gone public. That was all in average Americans' retirement portfolio accounts. They appreciated that growth. Same thing with Dell. You know, same thing with all of these companies. All these companies IPO'd well below $1 billion. In fact, on average, $217 million in market cap. And yet they returned, on average, over 44,000% to the investing public over the years. And that's what enabled NASDAQ to become the crown jewel of American capitalism, because NASDAQ enabled small investors' capital to fuel innovation and expansion. It allowed small investors to fund small businesses. Isn't that how America was built? You know, unfortunately today, the small cap IPO is dying a small death, a painful death too. In the 1990s, we saw an average 447 IPOs a year. That number dwindled down to 102 in the 2000s. Median market cap in the 90s, 130 million. 2000s, over $1 billion. So what happens to all those companies that are somewhere in the middle? They're still doing well, they're growing, these are great companies, it's just that the public doesn't have access to them. So who does? The VCs, the PE funds, you know, the sophisticated investors, pre-IPO hedge funds. You know, that's the sandbox you want to be playing in. You want to be playing in the sandbox with those cool kids. There's just no more meat in the public markets anymore. So where is the beef? It's in the private markets. The private markets are the new black. This is where the growth lives today. Look how the companies grew in the private markets in 2011 versus the public markets. The reason why these companies are growing here is because this is where long-term capital meets innovation and allows it to flourish. Because there's no high-frequency traders or pipe guys that are manipulating stock prices. They're allowing companies to absolutely flourish. You know, none of this is really anything new. Our stock markets have always been evolving since the beginning of time, from days of the, you know, under the buttonwood tree. We flocked to the exchanges where the most innovative of the day lived. You know, we raced to the New York Stock Exchange to buy stocks in radio and television. We raced to the NASDAQ to buy stocks in the latest technologies. And today, our most innovative are too small to list on NASDAQ, too insignificant, and they're way too small to list on the New York Stock Exchange. So today what's happening is they're being groomed in the private markets. And I think what's happening is that we're entering a new era, and it's the era of the social stock market. I've long hypothesized that it's been impetus that it's been innovation in mass media that's been the impetus for stock market growth. Just look at what radio did to the market in the 1920s. Next great bull market, 47 to 57, inspired by the television. 90s, Internet 1.0, or what I call the dress rehearsal. These inventions have forever changed the world, and they all have one thing in common. They've all created a more dynamic way of reaching the consumer, because that's what it's all about. It's about letting the consumer, giving them an opportunity to buy stuff. So today's social and mobile revolution is more powerful than these previous inventions combined, and it will fuel the next economic expansion, especially in conjunction with supportive legislation and an untarnished pure growth marketplace. This is how powerful social media is. It took 38 years for radio to reach 50 million users. It took Cityville less than 3 weeks, and not bad considering it took man over 4 million years just to develop the written language. So just like the Stone Age, the Iron Age, the Industrial Age, the Internet Age will transform society and the economy for hundreds of years to come. The Internet is the most disruptive technology in the history of the world. Every 2 days, there's more information being created than between the dawn of civilization and 2003. So the question remains, how do we capitalize on the innovation of today, especially when all of it lives outside those traditional public markets? First rule I ever learned as a broker was don't put all your eggs in one basket. But if we're all just investing in these traditional public assets, isn't that exactly what we're doing? So what do we need to do? We need to discover the private company marketplace. Look at the private company marketplace platforms, such as Gate Technology, Second Market, Shares Post. There are private shares desks that are popping up in brokerage firms all across the country. Here are a few of them. Look at some of the funds that are emerging that are focused on buying these pre-IPO companies. High Step Capital is a good one. Lou Kerner actually launched a social internet fund. GSVC is a company that's traded on the public market, trading on NASDAQ that you could look for. And then, of course, once crowdfunding becomes officially illegal, investors will be able to gain access to even more growth opportunities at even earlier stages of their development. And what's interesting about that is they'll actually be able to not only invest in companies at an early stage in their growth and have the opportunity to capture that return, but they'll also once again regain pride and ownership. There's no pride and ownership anymore in the public markets. People are buying tickers. They're not buying into companies. You need to be moving into self-directed IRAs and take control of your investment decisions. And you're going to meet Jim Jones later on this afternoon, and he's going to talk to you about that in more detail. So I always like to end on a really hopeful note, which is why I always include this slide of very grim headlines. Because I realize that the outlook looks hopeless. But don't be a Debbie Downer. And don't believe everything that you read, especially in the New York Times. These aren't even today's headlines. These all headlines were from New York Times in 1994, right before one of the greatest economic booms in our history. And you know what? The stars are way more aligned today than they were in 1994. We have regulatory reform. This Jobs Act is creating new opportunities for small issuers and investors. We're reforming market structure, not relying on depleted fiscal policy. We have unprecedented innovation that's snowballing. We have this rapidly expanding small business supportive untarnished growth marketplace that's rapidly emerging. The future is not bleak, it is full of enormous promise. And to quote one of my inspirations, Forrest Gump, that's all I have to say about that. So, thanks. Thanks. So you could find us on Twitter, follow us at NowStreet. You could read some of the articles at NowStreet Journal. Also, feel free to visit us on Facebook at facebook.com/NowStreetEvents. There you could upload pictures, see pictures from past events. And while you're there, please like us because we really, really, really want to be liked.